from the opposite perspective. How would you feel being short? You know, the shorts have been jammed. It's been 2 weeks of absolutely positively almost straight up. We had the acceleration on Friday, some positive follow through today. So now we've made new highs. We'll see where we go from here. But technically speaking, you referred to the S&P. Only one of the big three indexes made new highs here today. But you can look at it. 2,200 is this first target because we've been finally broke out of this range. We've been trading between 2120 and 2040 for over a year. That target's an 80-point push on top of that old high. 2,200 is the next stop in the S&P.
No, it's an interesting point. As you said, is the S&P 500 reached new record highs. We know that the Nasdaq in particular had a pretty atrocious start to 2016. There does seem to be some growing momentum, though, at the moment into the technology sector. We also saw some pretty positive movements in the industrials overnight. What has changed? Has the feeling towards the technology sector really evolved in the last little while, do you think? And that sell-off that we started at the start of the year, in large part driven what we saw, say, in companies like Apple. Do you think that those fears about what was happening in the global economy have allayed, at least for the moment?
Well, the sentiment has changed, and you saw the NDX, the Tech 100, has finally shifted. It's been a big reversal off the lows just a couple weeks ago. On the 27th, we were about 400 points lower in the NDX. So it's been almost a 10% reversal in just a period of 10 sessions, a complete turnaround. Now, I think a lot of that has to do with risk reward. The tech shares were overly beaten down compared to the other indexes. If you look at the Dow, you look at the S&P, we're up more than 4% on the year. We're not even back to unchanged in the NDX just yet. So there's more opportunity there, I think. I think that's where people are moving monies, and that's where flow is going to try and find particular segments and sectors and stocks that haven't rallied yet. One that I'm paying attention to here is Alibaba. Alibaba's been long forgotten about. You remember this was a $120 stock. The big story here in America is Amazon made new highs today, and they're going to start with their Prime sale tomorrow. So a backdoor play on that is the Chinese version, looking at Baba. Baba had been trading between 75 and 80 for the last 4 months. This breakout above 80 targets 85. 90 is the midpoint of where we've been from 120 down to 60. So there's some good upside potential there. The risk reward favors those kind of plays, stocks that haven't already participated. I'm looking at some options there that can take advantage of the larger overall trend, and you don't have to worry about the day-to-day fluctuation. So I'm looking at the October 75 call. The break even on that's about $2 higher, and it's got 3 months for positive things to happen in that stock.
But on the issue of Alibaba, they are making news at the moment, though, facing a profit hit on these new rules on search ads. That there is still a concern, is there not, that they're, although particularly strong in China, whether or not that they can use that growth to go more global, whether or not they can pull in more customers globally. What's your feel on that? How well placed is the battle between Amazon and Alibaba? We know Alibaba does a lot of other things as well, not just straight selling of products, and they do have different models. But do you see this as there will eventually have to be these two companies going head to head?
Well, yeah, I think so in the big picture, but it's just a comparison that Alibaba has been a decliner. If you look at Amazon, it's up 70% over the last year. Alibaba's unchanged. So again, it gets back to risk reward. I'd rather be a buyer here, lean on that 75 level, and look to see if it can bounce. If it can, 90 is the next upside target. Whereas Amazon, I don't know how to play it. Yeah, it could go a lot higher, but look at the PE and look at where we are. It could have a $100 sell-off just for no reason, just for profit taking. So, is it tradable? I don't know. That's where I'm venturing into, and to get into the business segment that Alibaba's in. China's not a bad place to be as far as expansion and growth and people buying and using the internet for commerce.
Very, very good point. Let's talk about financial sector, because it has had a volatile, rocky few weeks in the fallout of Brexit. I mean, the numbers that we saw, the falls that we saw in European banks and British banks were extraordinary. There was recoveries that came through, but there was a huge amount of volatility flowing through. That also affected banks over in the US. But it does seem as if they've come back to levels suggesting that maybe they're not even that concerned about the Italian banking crisis that still seems to move on. What are you seeing as far as the activity going around the financial sectors? We're also going to obviously be